Peace everyone, I'm back with another YouTube update, doing a technical overview and forecast of the top markets on my watch list. This video will be a bit different from the previous ones as it's been a while since I've done a video on YouTube. We'll be covering the following things you can see here, but before we do that, let's just get the disclaimer out the way. So make sure you always do your own due diligence before you go and invest into the market. Make sure you understand what you're investing in and make sure you always follow the correct risk management. I can't really emphasize this enough right now. As you guys know, we're in a bearish market right now throughout the stocks and the cryptos, and it's literally out of the cryptos, it's taken about 1 trillion out of the market. And that 1 trillion is coming out of people's pockets. These are people that are getting liquidated in the markets and just selling off their positions to the people that are making profits. So yeah, this isn't investment advice. This is information that I've gathered over my time of studying trading, and this is what I found to be profitable over the long term in terms of consistency as well. So first thing I wanted to go over is our Telegram. So it's been a while since I've been on YouTube. If you check our last video, it's a few months ago. But since that time, we've always stayed active on Telegram. So if you haven't already, make sure you go and drop a follow on the Telegram, because every week we do the weekly forecast and projection on this specific page. Let me bring up the name of it. There you go. Trading Capital Network Public is the Telegram address. So even though we haven't been active on YouTube, we've been active on this group. Every week we send out fundamental news and analysis, and also technical analysis, which is one of the most important things, on the Sunday forecast. We also send out different materials and other data that will influence the charts and the stock markets as well. As you can see here, every week we send out lots of things. We even send out quite a bit of information that is only relevant to specific days after these days have been missed. For example, actually, we'll do this. So this was a live liquidity grab to the key level I sent out at the beginning of the week. We was expecting some news to come out, and as you can see here, we caught it very nicely. Let's just forward it a little bit, not trying to really get into it, but as you can see, it was 7 on the dot, and we saw a massive spike on the dollar currency index. We was expecting this news for a while now. I'm sure we might be able to find important fundamental news coming out during this week, especially on Wednesday, which falls on the 15th of December. Found a few screenshots of what we was expecting, and as you can see, a few days later, we caught that liquidity grab as well. We were expecting this. And these are the sort of little information that is good to keep up to date with, because it's only relevant to like a few specific days. After it's been missed, we move on to the next sort of fundamentals and forecast projections that we're expecting. So there's many other things we send out here on the group, such as little theories as well. Here's one of my theories. So here is a analysis, a backtest analysis, which I actually done on the Bitcoin against the dollar. I went and analysed the 2018 bull run and also the 2020 bull run. I'm not going to get too far into it. If you do want to see the in-depth sort of analysis of these bull runs, you can just jump onto our Trading Capital and it will all be accessible to you. I'll just go over a little bit. So Bitcoin, last 2 major bull runs from 2017 and 2020 into 2021, we retraced and grabbed liquidity at around the 78.6% Fibonacci retracement level of the initial bull run before these next parabolic moves took place. So this was very accurate on these sides. You can see here 78.6%, 78.6%. Both of these times liquidity was grabbed, and then we saw parabolic moves going to the upside. This is what I'm expecting on this current bull run that we are, bear run that we're in right now. So the bottom should be reached at about the 78.6% level of the initial bull run that actually occurred. We'll get a bit further into Bitcoin and how you can keep up to the Bitcoin analysis as well as we get further into this video. But yeah, as you can see here, we're always active on Telegram. Make sure you go and drop us a follow, because this is basically what will keep you up to date with all of the major things going on in the markets. Also, I just wanted to mention how everything that I've actually sent on Telegram is still all accessible to you. So we got like all the media here of all of the screenshots that I've sent. We also have many files here as well. I've sent quite a few PDFs, for example, the Candlestick Trading Bible, well-known book read by millions of people, and also other little things such as information on the psychology of the market cycles and things like that. Also, you've got all the links here that you can get access to. This is why I like Telegram, because it sort of organizes everything for you and makes it easy when trying to get access to what you're looking for. As you can see here, there's cryptocurrencies that I'm on lookout for. It's ones that I've done research into. There's fundamental news here, and on top of that there's my forecast analysis, which I sent out on a weekly basis. So yeah, make sure you follow that. The link will be in the description below. I look forward to seeing you there. And so in this video, we'll just get straight into it now. The two major things that I always tell people to focus on before carrying out any investments will be two things. Number one is the fundamental analysis, which includes like economic news, influential things that are happening in the real world that will have an effect on the markets. And secondly is the technical analysis, which is chart behavior. The charts give us historical data of what's happened in the past and gives us information on what could happen in the future based on such things as like human psychology. So firstly, I will go into a bit of fundamental overview for you guys. So one website that you can use is MyFXbook. I'll pop onto the website for you now. So this is MyFXbook. This is great for keeping up to date with stocks and fundamental news that's coming out. Key reason why I actually use this website is for the economic calendar. So if we just pop onto the economic calendar now, it gives us an overview of what we're expecting in the week ahead in terms of fundamental news coming out, and also reports that banks and other major institutions and corporations will be releasing. So if you pop onto this website, this is my options that are ticked for how I like to look at my fundamental news. I only keep into account high impact news and medium impact news. I have my USD pairs highlighted and other pairs that are traded against the USD, and a couple other ones that I'm interested in. This week, 23rd of the 1st 2022, we're going into the last week of January. We are expecting fundamental news to be coming out during the week. One of the most important ones that I'm looking into is on Wednesday, the 26th of January, as you can see right here. At 7 p.m. we have a Fed interest decision rate. So if you don't know what that is, you can literally pop onto the option and it gives you a nice overview of what it actually is that we're looking for. So the United States Fed interest rate decision. For those that don't already know, the Board of Governors of the Federal Reserve and the Federal Open Market Committee have equal authority to set interest rate in the United States. After receiving recommendations from one or more of the original Federal Reserve banks, the board makes a decision on discount rate modifications. The FOMC makes decisions on open market activities such as central bank money levels and the federal funds market rate. So the higher than expected figure should be seen as positive for the USD, which will be bullish, and while a lower than expected figure should be seen as negative, bearish for the USD. So when this news come out at 7 p.m, like I showed you the liquidity grab in the previous Telegram, is it still here? Nah, it's gone. Doesn't matter anyway. But we was expecting a bit of news to come out about a week ahead. We saw some chart pressure building up, which is part of another theory that I've actually been working on over the last few months. So when we see chart pressure building up, we usually see real world influences actually use that chart pressure to actually create breakouts. So it's It's all correlated, guys. Add this website to your tabs, your phone. You can even download the app. Great way to keep up to date with the fundamental news that's coming out over the upcoming weeks. And also, there is actually another bonus tool that I'll be showing you on my FX book. I'll put that at the end of the video. So make sure you keep an eye out for that. It's quite a good tool. It could be used as another confluence when trading. Gives you an idea of what's actually happening throughout all of the foreign exchange markets. So number 2, which I mentioned, was the technical analysis. So we have fundamental analysis and now we have technical analysis. So technical analysis is all chart work. This chart gives us a view of what's happening in the markets. Markets are always fluctuating up and down, and by looking at this chart we can see what's happened in history of the markets. You have to think, guys, in the market there are buyers and sellers and speculators. So every time it goes up, it's the buyers taking control. Every time it goes down, it's the sellers taking control. So it's a battle against the bulls and the bears. Or on the other hand, you're a spectator, which is the safest position to be in, going into the charts, or even when in doubt, just become a speculator and you will be successful in the market. So what I wanted to go over here now is I'm using a website called TradingView. If you don't already know, I'll be leaving the link in the description below as well. This is great for chart analysis. It lets you save all of your progress and set things such as like notifications, which is a massive factor when trading, because you can't be watching the charts all day. So it's best that you set alerts and notifications for yourself for when different key levels are actually hit on the market. On the top left hand side you see the asset name. This is the US dollar currency index that we're looking at right now. This is a fundamental part of the trading as well. I'm going to go over what the DXY is actually with you guys in this video. Alright, we've reached about 12 minutes on the video now, so we won't make this video too long, but I wanted to highlight a few of these important factors going into this week, because not all videos I get too in depth into what I'm speaking about, and this video should give you an overview of why I use what I use. So what is the DXY? It's a index of the value of the United States dollar. So what does this mean? This shows the strength of the US dollar, and that is determined by collecting all other currencies that exist in the world, such as like the euro, you have the pound, you have currencies such as like the Japanese yen, you have the Canadian dollar, you have others like the Swiss franc. So all of these have a weighted position in the US dollar currency index. I think the biggest weighted position in the dollar index is actually the euro, with over 50% of its weight. And then all of these put together determine the overall strength of the US dollar. So you also have indexes for, like, example, this is the euro, and then we have like the British pound index, many different indexes. All of them coming together will give an average weight, and then the DXY is determined by those put together. Now, I'm not going to get too deep into the history of it, but the DXY initially was actually pegged with gold. If you don't already know, the dollar is not pegged with gold anymore, meaning it has no intrinsic value or physical value in the real world. I won't get too deep into that, but if you do want to understand money, make sure you go and look into the US dollar right now and how the value is actually determined by just the Federal Reserve creating more money, really. Won't get too deep into that, even though it's a very interesting topic. Maybe I'll do a video about it in the future at some point. What I will be getting into now, so I mentioned our Telegram, mentioned our fundamentals, and mentioned our technical overview. So the dollar strength determines what happens throughout the markets. So we'll begin with this week. So it's the 23rd of the 1st, 2022. We're going into the end of January now, with the DXY moving a bit bearish. As you can see, as always as well, I wanted to highlight the key things that I actually pop onto the charts. Firstly, these blue dotted lines. You see, if I go on to, for example, this. So the blue dotted lines on the charts represent previous week's highs and previous week's lows. That's the previous week's high and the previous week's low. Week before that's high, week before that's low. Week before that's low, and week before that's high. These are major levels in the market, because when the markets actually close, all institutions have to leave the market, meaning they leave their market either in the markets, or they've taken their profits and they've left the market at a specific value that they'll be entering at again on the following week. So by understanding the previous week's highs and the previous week's low, we know exactly where the markets are moving their money. Once the markets close on the weekend, we know that the institutions have been left inside the market, ready to get back open on the Monday morning, allowing us to see exactly where they've actually traded for the full previous week. So for example, this previous week's low and previous week's high, we know that the institutions have actually only traded the value within these previous week's high and previous week's low. And if we look at the week before that, they created a previous week's high and previous week's low. We was actually between that as well, meaning there hasn't been any breakout yet. We're in a consolidation phase as well. Just from this previous week's highs and previous week's low, we can determine institutional influence. Now, secondly, what I wanted to mention is the trend lines. So my trend lines are a little bit different from the average thing that you'll see on YouTube. These trend lines are either red descending trend lines or green ascending trend lines, and these trend lines are all based off the initial market cycle that takes place according to the Wyckoff system and logic. Now, on this you can see there is a red line going down here. There's lots of green lines, so I'll just highlight it for the sake of it. So there's you see, I'll make it a bit straighter. That's the red resistance line that we're seeing right now. So as you can see, the value is actually sort of respecting this line, consolidating upon this line. So it shows us that this consolidation phase is, this level is being used as a consolidation phase, meaning after consolidation we need to see a breakout either above or below. On all the charts I highlight these red ascending and red descending and green ascending lines according to the initial Wyckoff market cycle. Now, if you want to get further into actually understanding how we determine the initial market cycle according to the Wyckoff logic, make sure you go and follow our Telegram group, because there's been much information that I've actually given on that. Furthermore, potentially at some point during the first quarter of this year, I'll create a video on how to actually find the first initial market cycle based on the Wyckoff logic. Now, this week, what are we looking for? After this consolidation phase, we're going to need to see a breakout. This resistance level, I'm thinking we're going to see continue get respected, and we'll potentially come back down to this 94.50 level. Overall, the markets are going down, and usually when the markets are going down, the dollar index actually increases in value. When we saw this increase in value from the 14th of January all the way up here, we saw Bitcoin, Ethereum, and a few of the other major cryptos increase in value. And as soon as we saw this consolidation phase starting at this resistance level right here, we've been seeing a crash in the market. Keeping in mind, if we see a crash in DXY now, we'll see a reversal through Bitcoin and all these things like that, because they're in negative correlation with it. So let's move on now to Bitcoin actually, and I'll show you a few other things. So as I'm making this a bit more of an educational video as well, I'll take you through the last few weeks analysis of Bitcoin and how accurate we've actually been in terms of forecasting the market. There you go. Let's make this a bit lighter as well. Okay, so one thing I've been getting a lot of feedback on is this. So once I send any information on Telegram, for example these links here, all of these links that you can see here, so any link you can see here, after I've published these things on Telegram, it's actually published for you to go ahead and test in the real world. So nothing to hide, guys. The most previous Bitcoin analysis I sent out was this one on January the 16th. Today the 23rd. I'm going to take you through how this could have been used going forward. So on this analysis, it was sent out on the 26th before these bearish moves actually started taking place. If you can see here now, on the previous week's analysis, I put these red arrows in at these green key levels. So there's one here, there's two there, there's three here, and the most previous one that I actually done on Bitcoin, which is the fourth one, was right here at the 71.8% level, which is a manipulated level that I use rather than using the 61.8% level, because usually the institutions like pulling back around 10% or so in the market to catch out liquidity. But that's for another video as well. So this arrow was put here. What I mentioned as well, I'll just scroll down for you guys. So every week, as I just mentioned, blue dotted lines, the trend lines, and also the key levels on the right hand side. These can be used for planning trades, entries, and exit levels for the lowest risk, highest reward. Follow the correct risk management and all entry point confluences. What I mentioned on the 16th was the dollar currency index this week showed a reversal, which had an impact throughout the markets. From the previous analysis, we know that the cryptos usually have a negative correlation with the US dollar. Going into the end of Jan, we're looking for further bearish continuation. Keep this in mind, guys. We're looking for further bearish continuation and looking at this small bullish move, which is right here to here between these weekly highs and lows, as a short-term retracement for the most bearish move. Okay, so this was a retracement of these bearish moves to catch out any liquidity and to also catch people who want to start buying again, who are getting hasty to buy again. Overall, I don't believe this bearish move on cryptos is done, because a lot of retail is still involved and also many leveraged positions which need to be liquidated before we see any major moves up. So that means we were looking for further bearish moves. I'll pop back onto this. So if with the good thing with TradingView is now, this is the thing that I published, and you could literally go into TradingView right now. If you press this arrow on the right hand side, it shows you what actually happened after I published this analysis. Oh, I don't know why it keeps popping off like that. So we press the arrow, and now what is highlighted on the right hand side is basically what happened after this forecast was given to you guys on Telegram. Remember this fourth arrow which I mentioned here at this key level, this was a sign for bearish continuation. You can see that the market consolidated at this key level all the way here, stayed between previous week's highs and previous week's lows, which is very important as well. So that's two confluences right there to start preparing for bearish moves. I already mentioned as well, we're looking for further bearish continuation. So as soon as this high was made, we saw a lower high, we saw a lower high, we saw a lower low, we saw a lower low. 1, 2, 3, 4, number 5. Could have been a 1 to 5 setup right here, and then perfectly from the 43.440 level which I gave to you guys, we went all the way down to my 88.6% level, and that's where we're floating right now. Now this market is live right now, going into Sunday evening. You can see how accurate it was, guys. This is Bitcoin chart. If you just go on here, okay, I can't move this round right now. I was gonna show you how accurate it is, but on the live chart we'll cover that now, because I'm gonna do a forecast for this upcoming week. But as you can see here, the 88.6% was used very nicely. 100% level is here. That means 100% retracement of the most initial bullish run that happened, which is potentially where I'm expecting the value to go. We've got a few trend levels coming up here where we could see some slowing down of the market, but I believe that this bear run will be seeing further continuation, because we need to liquidate all retail positions before the market can increase back in value. So now I've showed you how this analysis could have been used. Let's go into this week and see what we're expecting. So last week this arrow was here. I can just literally copy paste this arrow and move one back down to here now, because this is the next key level. We're going to probably see some sort of retracement back above this level, but overall I'm looking for bearish continuation, and if we do fall, these key levels will most likely be being used. The $19,890 level is the all-time high on the monthly resistance as well, which will be a major form of liquidity and definitely be used as some sort of support line, whether it's just a retracement or whether it starts creating new support for the next increases in value. Of course, we have the FOMC news coming out this week as well on Wednesday, interest rate decision, which will have an effect throughout the markets as well. I'm going to be putting a screenshot of this on Telegram, so make sure you use the method that I used today, and you can go and test it yourself in real world time to see what the results will be of this analysis. Let's move on to the ETH against the dollar now. Same sort of thing we're expecting on ETH against the dollar. So now, guys, I'm just going to be going over the last few assets I've got on my watch list, like I do on a weekly basis. We're covering Ethereum, then we'll go into gold, and I'll cover the pound against the dollar and the euro against the dollar for you in this video as well. So what's happening with Ethereum against the dollar? Same sort of thing. As you can see here, we came down to the 78.6% level, and this level was used as consolidation. So as you can see here, the 78.6% level is a major thing that we use throughout all of the stocks and cryptos that we be trading. On Telegram, if you go on as well, you'll see lots of information on how the 78.6% level can be used, and also reasons behind why I actually use these levels compared to using other levels that people will be giving out. As you can see here as well, the 71.8% level, which is 10% above the 61.8 level, which is the golden ratio, usually being used because institutions like to do that 10% manipulation, as I mentioned earlier, but I'm not going to get too far into that. Next key level for Ethereum against dollar is the $1,786 level, which also falls at the 141.4% retracement level as well. We broke the 100% retracement level now, and now I'm definitely expecting it to at least go to the 141.4% level. It'll be very nice if we see that. We're going to be getting very nice cheap positions for Ethereum if we're looking to go and buy it anymore into this year. So as you can see here as well, we have quite a few resistance levels coming up. So these levels, as you can see, they date back very far. We have this key level right here, which is from the 13th of January 2018. We have another key level right here, which is from the 28th of January 2018. And we also have another major key level right here, which is from the 16th of February 2018. Keeping in mind, this is when we saw one of our most initial major bull runs. And from here, all of the crypto sort of hype started taking place. So I'll be doing a screenshot of this as always and popping it up on the Telegram. Let's move on to gold now, because what's this video on? We're on about 30 minutes now, so we'll just go over these videos and end it there. I mean, go over these charts. Okay, so gold has broke a key support level. When there is uncertainty in the market, people usually like to go over to assets such as gold and silver, even a bit of palladium. I'll just be covering gold in this video, but usually the metals are quite good to get into when there's uncertainty in the market. As you can see, All of the markets have been dropping, but gold on the other hand has been picking up pace quite nicely. As you can see, the previous week's highs and previous week's lows are slowly creating higher highs and higher lows as well, which is a good sign and indication that we'll be seeing further bullish continuation. I will be popping this up on the Telegram group, so make sure you use these key levels going forward. This could potentially already be a nice buy level at the previous week's high, going into this week to sort of reach these key levels which I've set on the right, which is 1865, furthermore 1877. Alright, let's go finally into the foreign exchange pairs, which I'll be covering. Alright, so the pounds against the dollar, we've seen nice bullish moves from mid-December all the way up till 13th of January. From here we've seen markets start pulling back as the DXY started increasing in value. So as the pound goes down in value, the DXY increase in value. I showed you the DXY earlier, so let's just base this analysis off that. So DXY at the moment is increasing in value. Reason being, we're seeing the pound against the DXY decrease in value. I'm going to show you something else at the end of this video in terms of the sentiment as well, so make sure you keep an eye out for that. Overall, going into this week, we have a few key levels coming up at the 1.3515 level, and furthermore I was still sort of expecting this key level up here to be hit, 1.3825, because if we go back we can see how this was used. Look, it was used as support here, it was used as resistance here. So I was expecting a bit of further retest of this level, which hasn't occurred just as of yet, but of course we're just at the beginning of the year, so there are a lot more moves to be made this year, guys, and a lot of more positions that we can get into with higher confidence rather than just basing it off 2 or 3 confluence. Usually all the trades that we get into in terms of entries has at least around 3 to 4 different confluences. Keeping that in mind, let's go into Euro USD. Same thing, the dollar is increasing in value now. If we go on to the Euro futures, we can see that the Euro is actually looking very strong. This is the US Euro index right now that we're watching. You can see that it's in some sort of consolidation phase right now. We could potentially see a bullish breakout here. So Euro USD wouldn't really be on the top of my list because we're not seeing any good correlation between the euro and the dollar. It's best when we see negative correlation because we know exactly where to trade them. Yeah. Also, as my bonus part of this video, what I wanted to show you, it links with the pounds against the dollar and the euro against the dollar as well, is if we pop back onto my FX book, you guys can follow along and do this with me after you've I told you guys to add this to your tab. But another thing that you can do is if you go into community and then click on sentiment, so now this will give us access to client sentiment according to my FX book. You can get sentiment reviews and reports from other websites, such as there's a few other websites that's mentioned on my Telegram as well. All of the links are saved, so if you can just scroll through the links, you'll be able to get access to them. So what is this? This is basically a client sentiment giving how many buyers and how many sellers is in all of the foreign exchange markets. So we can scroll down here. So you've got the Euro USD, we've got the GBP USD, you got the USD JPY. We've got all of these different pairs, and if you see here, we got the long positions against the short positions on all of the charts. This can be used greatly. It even gives analysis on gold, which is very important. I use this quite a bit, to be honest, and what you'll realize is once you start using this is usually let's take an extreme example such as, say, the Euro CHF right now. High percentage is bullish. Now we know that market manipulation takes place. What was it? Euro CHF. Let's see if I can pull that up. Okay, so this is the Euro CHF chart, and what we saw on the forex sentiment is that EURCHF is majority buyers. Now this is an extreme example, but it can be used throughout all of the other pairs. Even though the market sentiment is showing extreme amount of buyers right now, we can see that it's very clear that we're in a bearish market. This is clear manipulation and a clear way to understand institutional manipulation when it comes to the market sentiment. The more retail positions that are in the market, the more likely the market will not go towards that direction and actually go opposite that direction to liquidate all of these retail positions. Now, using this market sentiment, literally, if you were to do EURCHF, you could be like, okay, market sentiment right now is showing extreme bullish pressure. I'm going to short the market. As you can see here, this should be red. Following these resistance lines, we could have seen, as soon as this resistance lines come in touch, we could have potentially entered a sell position right here. Something along these lines. So we would see that the value came and hit it. Here it came back down. We saw a retest, which would have been the key level we enter, and on that we would have put the stop loss just above the most previous high, and the take profit level would have been just at the previous low that was made. It's a 2.93 trade right there that could have been done just based off the market sentiment and understanding how the markets go completely against retail and how institutions trade completely against retail. So I'd highly recommend you add this as a tab as well, market sentiment. If you want a bit more further information in that, drop me a message and I'll potentially do a video based on that as well, because I know I've mentioned quite a few things today in this video. So we went over my Telegram and how we're always active on Telegram. We went over fundamental overview and how to sort of analyze what's coming in the week in terms of fundamental news and reports. We also went over the bonus tool, which was the market sentiment. Let's put that into brackets here. Market sentiment. And we also went over the technical overview of the dollar strength, what the dollar strength actually is and how it determines the value of other currencies. We went over all of the other top assets on my watch list. So I hope it has helped. Over the next couple of weeks, I'll be doing a few different other videos. It will be very similar to this, except I'll potentially be going a bit more in depth into some of the key aspects that I discussed today, and hopefully gives you a better overview of how it can be used, how these simple things can be used on a weekly basis to project what's happening in the markets and be profitable throughout the markets, whether the markets are going up or whether the markets are going down. I hope it's been helpful, everyone. Make sure you drop us a subscribe. Go and follow the Telegram, because that will probably be the most helpful for you guys. The links are all down below. If you need any further information, you can drop us a message on Telegram and we'll try our best to help you. But for now, I hope you stay profitable. Take care of yourself. Peace.